Happy Tuesday. Nice start, 2-1, advancing to declining stocks. Remember, it's tariffs and global trade. Let me just show you the futures overnight. We lifted on reports that Steve Mnuchin was talking to his Chinese counterpart over there, Mr. Li, the vice premier. And we saw a move up between 8 and 10 o'clock. That's about when that story started coming out. That's the key mover here. Sectors today, some beaten up sectors doing better. SMH finally lifting a little bit. It's horrible this quarter, down, 12 or 13%. The home builders, metals and mining, awful. They're lifting. Arca Natural Gas, that's opened, and that's up about 1.5%. I want to show you something rather extraordinary here. Energy, look, if you watched oil's down another 2% today. Natural gas is up almost, it's now 5%. So look at this, it's $4. It was $3.20 2 weeks ago. This is extraordinary. You very rarely get these kinds of divergences. As a result, you're getting a split. Companies that are natural gas heavy, take a look at some of them. Southwestern, Range Resources, some of the smaller companies, EOG that are out there, Cabot Oil and Gas, all on the upside. Others that are more oil dependent not doing as well today. Also, the FANG names, obviously, Apple is down a little bit here today. Apple's dropped below its 200-day moving average. I believe that was 193. Well, Apple's on that 194, just positive. Our early pre-open, it was below that number here, but all the FANG stocks are open to the upside. That's a help. Remember the big issues for stocks. It's very simple. China tariffs, global slowdown, Europe and China, dollar strength, Fed tightening. There's your four issues for it. And the fund managers are reflecting that. I follow this Bank of America monthly survey, about 230 fund managers all around the world. China trade war, 6 straight months is the #1 concern. 1/3 of them mentioned that. Fed tightening, a quarter. Those have been the two big things for the past 3 or 4 months. And the China slowdown is also still up there at 14%. The most crowded trades that are out there, long the FANG stocks and the BAT stocks. That's, of course, Baidu, Alibaba, and Tencent. 30% said that's the longest trade that's out there. Short U.S. Treasuries and long dollars. So let's look at this. The long FANG is coming unwound. That's not working right now. Short U.S. Treasuries, I'd say the jury's still out on that. The long dollar, that's definitely still working for everybody. That's no signs of that coming unwound. At least not right now here. Small caps, I want to talk about a little bit here. I mentioned it yesterday. The Russell 2000 is down 11% so far this quarter. Now, the S&P is down 6%. The NASDAQ 100 is down 10%. The Russell's performing worse than big cap tech stocks. Most people don't notice that. I mentioned yesterday, we're right at the 200, the 50 and 200-day cross, that death cross sitting there for the Russell 2000. I think that's kind of important. I don't quite know what to make of it, though. There's a lot of debate about what this is trying to tell us. It's not clear here. So obviously higher rates are challenging for small companies. That's an issue. We do have somewhat weaker earnings growth. The earnings growth for the Russell 2000 is not as strong as the S&P 500 overall. There's also fewer earnings and sales beats the last quarter than the large caps had as well. So some people are trying to argue that this is telegraphing some kind of slower domestic growth, not global growth. Domestic growth. Remember, these are small caps. This is very hotly debated. It's not out there right now. The numbers don't indicate that. But again, the markets are discounting mechanisms. And at least right now, the argument is, what's 2019 going to look like in domestic growth here?